What's up, everybody? This is Andrew here with Spark Finance, bringing you the important business news in the past week. So to start off with, we have the information about these shorted stocks. This is the biggest thing, GameStop. I have a whole separate video on that if you want, check that out. But just to highlight a brief overview, GameStop, everybody went into this because they were following Wall Street Bets Reddit, where they were telling them to go into there and screw over the hedge funds that were shorting the stock. The stock is up 400% in a week. Then you also had stocks like AMC up 178% in the week because people were doing the same things. This is known as the meme stocks now. You have Nokia and BlackBerry and Bed Bath & Beyond, some of the other ones there. Then you had Michael Burry come out, who owned shares of GameStop, and he made up to $200 million with this stock going up so much. He owned it before it was popular, and now he's benefiting from that. Ryan Cohen, who is the guy from Chewy Inc., that went and purchased $76 million worth of GameStop stock and went on the board, his shares are now worth $1.7 billion as GameStop is around $300 a share now. So he just became a billionaire on this. Of course, we don't know if he's going to sell or hold those shares. Michael Burry also said that this is insane right now, what is going on. He said it's good that people made money, but it's kind of insane now, and there should be regulatory repercussions from this after this whole experience about the GameStop debacle here. AMC is also raising shares. They're selling, I think, $300 million worth of shares now to actually help fund the business. So some positive did come out of this where the company's actually able to gain additional capital from that. So then if you look at two major things, well, if you also look at the amount of shares that traded hands now, it's 23.7 billion shares because of all this retail investors coming in to trade shares of GameStop and the other meme stocks. So when you have all this going in, that's the most volume on the exchanges since the 2009 crisis. Pretty crazy there. The Moderna CEO, he came out and said that we're going to be battling this coronavirus and the variants for some time. He said, quote, "I believe SARS-CoV-2 is going to stay with humans forever." He also said that we're going to have boosts adapted to the virus like we have for the flu. And these are mRNA viruses, so they're going to be around for a while, and we're just going to keep making different vaccines and booster shots for it. So that's not great news there, but at least we have some vaccines coming on the way that should help with it. Then we have SpaceX making history once again. It seems like they're making history all the time now. SpaceX launched their Falcon 9 rocket Transporter 1 from Cape Canaveral, Florida on January 24th. And why this was important was because on this launch, they actually shot up into space 143 satellites on a single rocket. So this is the first time that many have gone out on a single launch. Then we have Janet Yellen coming into the Treasury Secretary position. This is the first time that there is a female Treasury Secretary. And the vote was 54 for and 6 against for her to enter into this new position now. Now remember, Janet Yellen was the Federal Reserve Chairman before Jerome Powell. So they should have kind of a nice, happy relationship there as Jerome Powell continues to print money, and now he can work with the Treasury Secretary and everybody can print money and everybody can be happy. Should be nice there. Then we have inflation watch. So for the housing prices, we saw some numbers come in earlier weeks that did pretty well. Standard & Poor's said Tuesday that the S&P 500 CoreLogic Case-Shiller National Home Price Index posted a 9.5% annual gain in November, up from 8.4% in October. The last time the index reached this level was in February of 2014, so it's pretty significant. It's been going up a lot here. Then if you're looking at also the trend of accelerating home prices that began in 2020 has now reached its 6th straight month here with November's good report. So that's another indication that the housing prices, it was not so sure what was going to happen when the pandemic started, and then we've had 6 months of it going up here. The S&P Home Builders Index is up 9% to date, year to date. And Redfin, which is a mortgage company with keeping track of all of the different trends and prices and everything else, they said that the highest increases are in cities like Austin, Texas, Las Vegas, Nevada, Phoenix, Arizona, Sacramento, California, and Dallas, Texas. And inventory in these cities is very low, helping to the price increases, the high cost there. The CEO of Redfin, Glenn Kelman, said this looks like the frothiest market he has ever seen. So that's pretty crazy that he's making a statement like that there. Microsoft came out with their earnings and they kind of did really well. The CEO Satya Nadella is doing really well. They had a plan here, they had a vision, and they're pretty well executing on it. They had sales up 17% to $43.1 billion for revenue. Then you had the second quarter net income rise up 30% to $15.5 billion. Analysts were only expecting $12.6 billion, so they blew out right there. Microsoft is up 40% in the past year, and you can see why they're doing well when they're coming out with good earnings reports like this. One thing I found very interesting in this was that the gaming revenue was actually up 51%. Now remember, the new consoles came out, the Model X, the Xbox Model X came out, and you have the whole idea of everybody was thinking, Microsoft will be making money on their cloud business, kind of like Amazon does. They make a lot of money in the cloud business. But on the revenue side, their gaming division made $15.1 billion, while their cloud business only made $14.6 billion. So their gaming division actually made more than the cloud division. And this is where they were going. And remember, they bought up like 6 major developers, and they were kind of like buying up all these rights to make the Game Pass a lot more beneficial to consumers and have a lot more content on there. Then they tried to sneak out a little price increase, and by little, they were literally doubling the cost of Xbox Live. And there was such a public uproar about this that they kind of did the same thing Netflix did, where they said, all right, no, we're not going to do this. We're holding off. People were mad. They're raising the price so much in a pandemic. But it's going to be the same thing like Netflix, where eventually they're going to do the price increase. They're just going to give it some time, and hopefully people will forget and not protest next time. That's the idea I think they have. Then Beyond Meat made a nice deal. They control about 13% of the alternative meat market. And if you tried their burgers, they kind of taste like salt burgers to me, and they're not really the healthiest things, but they are not meat-based. So if you're into that, they struck a deal with PepsiCo to create and produce snacks and drinks with plant-based protein. This way, people don't have to execute animals to be able to survive. You can eat non-animal-based products. Verizon came out and they missed their earnings they had a lot of problems with their profit due to higher costs and not that many new people coming onto their phone wireless network and everything. They're the #1 wireless carrier though, and they're still having a lot of trouble getting new people on it. They did report a better outlook for 2021. Small and local business segment is struggling though during this pandemic, so they're not adding a lot on there. Broadband subscribers were down 60,000 compared to 100,000 in the previous quarter. So that is down as well. They're trying to spend a lot of money here and see what they can do. Then we have Boeing. We were talking about Boeing doing terribly in the past here, right? They just reported a net loss of $11.9 billion, which was a record loss for them. They also pushed out the 77X plane production to 2023 instead of proceeding with that now. So Boeing, once again, just having a lot of trouble on all sides. But this company has a bit of a comeback here. General Electric, GE. GE has been showing up a lot on the radar lately as they're kind of like making a bit of a turnaround. They had a $4.4 billion in free cash flow for this current quarter. They were able to get through 2020 without burning cash, which was over a year ahead of schedule. So that's big news for them. They're ahead of schedule on their kind of comeback here. And they gave a positive outlook for 2021. So they're thinking that business is coming back for them, and they've cut the cost now. Then we have some news from the Federal Reserve. So the Federal Reserve came out and they kept rates unchanged at that 0 to 0.25% rate for the Fed funds rate, which kind of sets all of the rates in the economy, including the Treasury bonds. They have the mortgages are all based on that and everything. The unemployment rate right now is 6.7%. And they were marked that there's notably less labor market participation than before the pandemic. So you're seeing not as many people participate in the labor force, a lot of people on unemployment. And the one thing that is funny about this whole thing is that they were saying, they were speaking against wealth inequality, right? But the one thing that creates the most wealth inequality is driving up the price of financial assets and diminishing the purchasing power of people's dollars when they earn a living wage. So that's exactly what the Federal Reserve does when it kind of does all of these bailouts and everything. And remember, they actually acknowledged that the consumer price index picked up over the summer, But they says in the future that's just going to level off. It's going to be fine. There's going to be no inflation. But we are seeing it in our videos. We talk about a lot of inflation in all these different commodities. On a 12-month basis, inflation remains below their 2% objective, is what they're saying. So they're going to maintain their sizable asset purchases here. So they're buying $80 billion worth of Treasury securities and $40 billion worth of corporate bonds every month. So if you wonder why the bond yields on corporate bonds are so low, that's because the Federal Reserve is going in and buying them all up. And they're going to do this until unemployment gets back to normal. And here's a big one. Inflation is over 2% for some time. So they're going to wait until it overshoots. Then Apple, they had a big announcement. They crossed $100 billion in revenue for the quarter. And this is based on lots of iPhone sales, record iPhone sales. Total revenue was $111.4 billion. Profit of 29% increase to $28.76 billion. They earned $1.68 per share versus $1.41 estimated. Then they indicated that they were drawing down channel inventory on iPhones. And this made people think a bit about this. Like analysts were looking at this and they're like, wait, this is not exactly good numbers. They were just kind of getting rid of extra stock, maybe doing discounts or something like that to get rid of extra stock. It's not as good as if there was normal demand. Then you had Tim Cook, the CEO of Apple. He came on the virtual stage of the Computers Privacy and Data Protection Conference on the 27th or 28th there. And he did this kind of jabs at Facebook, which is basically now considered a competitor to Apple here. In his speech, he said that algorithmic-driven social media platforms are interconnected ecosystems of companies and data brokers. They purvey fake news and peddlers of misinformation, and they should be reformed. So this is a direct attack at companies like Facebook and Snapchat and maybe even Reddit now, I don't know. So Mark Zuckerberg then came out and he took jabs back at Apple, saying that Apple is doing these anti-competitive practices when they're implementing these new privacy rules, preventing companies like Facebook to be able to track individuals for advertising purposes, and that's going to hurt small businesses. They actually took out a full-page ad in the Wall Street Journal, in old print media, to say that Apple is killing small businesses. And remember, they are the ones that also Facebook sided with Epic Games in their lawsuit against Apple about the Apple Store and charging 30% transaction fee for any kind of transaction that takes place through their iOS ecosystem. So now you have like a lot of the battle heating up here with this. I mean, if this is all about what's going to happen with Facebook once they put these kind of privacy practices in place, they're saying that it might be 50% of their ad revenue could be lost because of this. And another thing from Apple was that they took the #1 spot again for smartphones with the new quarter here, the fourth quarter, where their iPhone was the top. Facebook then had record revenue and profit. Online shopping increased during the whole pandemic. More people were using their platforms because they were stuck at home with nothing to do, so they just keep scrolling endlessly on these social media platforms. And it's just about like, where's the future for this? Because they're getting investigated by the federal government. They're having hearings. And then on top of that, you know, they have the whole issue with Apple and the changing privacy settings and the concerns around that, if they can still make a profit with their ad business. Then we have Ant Group. So we know how China came out and was kind of going against Ant Group because the founder, Jack Ma, was talking about the federal government there, the Chinese Communist government, kind of regulating too much. Well, turns out the Chinese government just won because Jack Ma went into hiding. He wasn't doing many public appearances. And then Ant came out, Ant Group, and announced they will become a financial holding company overseen by China's central bank. So basically they're going to be like, they're in the lapdog for China's central bank now. So they had to give up all that like kind of freedom and the innovative stuff that they wanted to do to be able to have their IPO. Comcast came out and they had earnings beat with 56 cents per share versus 46 cents per share expected. So revenue was $27.71 billion versus $26.78 billion. So right there, they beat on both fronts there. They added 33 million subscribers to their streaming app Peacock. So that was big news because we're seeing all of these streaming platforms, except for Apple TV, really going up on subscriber counts. Fourth quarter GDP came in at 4.0, which was below the estimate of 4.3% for the United States. So we came in below that. The economy then contracted 3.5% for all of 2020. That is the worst contraction since 1946. Wow. So, and this is also the first contraction in GDP since 2009. This is the first full yearly GDP contraction since 2009. Tesla came out with a lot of news. They're going to have their Tesla semi-truck launched later this year. The goal of them now, they produce 500,000 cars about in 2019, 2020. 2021, they want to produce 750,000 vehicles. They announced new Model S and X interiors and a little bit of updates on the exteriors. By the way, they also cost about $10,000 more. Other updates included the battery packs and the powertrain and different models. So they had the standard model, Model S, costs about $80,000 if you get the bare bones model. The new Model S Plaid, that they call it, costs between $120,000 and $140,000, and it includes a tri-motor all-wheel drive. I think they said it's the fastest production car that you can get. It can go to 0 to 60 in 2 seconds if you get the higher end model. Free cash flow for the company was at $2.8 billion after spending $3.3 billion on all these capital expenditures building all these new plants. Elon Musk said that 2021 should be a great year for Tesla. We'll see if he's just saying stuff again or if he's actually going to do it here. The company indicated operating margins are expected to grow, and that's important because we'll get into that later, what happened in the current quarter. They indicated the global demand right now is still outpacing supply, which has been the case for years. The earnings per share were 0.80 per share, the expectations, but they only made 0.23, so they missed on earnings. Revenue was 44.9% year-over-year increase to $10.7 billion from $10.38 billion. But the big problem here is gross margin was down 24.1% from 27% to 21%. So the deliveries were up and everything, but there's a problem here if you're missing earnings estimate after your stock has run so much. The average selling price on their cars now is down 11%. So it's good that they're, I guess, doing new models so that they can kind of hopefully get a higher operating margin now. This is 6 straight quarters of profitability, but again, the stock sold off because they missed their earnings. JMP Securities downgraded Tesla to market perform. The median price target for all analysts on the company now is $515. And keep in mind, the stock is trading at $800 and it's sold off a bit since then. Tesla is having also a lot of trouble getting the batteries that they need. We saw on the inflation front, cobalt prices are really increasing. And to build their semi-truck, they're not able to get all of the batteries they need. The semi-truck is also supposed to be built in the Austin, Texas Gigafactory. So we're going to see if that comes online and they're able to produce the cars there as well as the pickup truck. Johnson & Johnson came out and said that their vaccine, unfortunately, is less effective. It's only 66% effective in the trial in the United States. I think it was actually 66% overall, 72% in the United States, like 66% in Latin America. Novavax, they said that their vaccine was 89% effective in the UK. So we have some more news on the vaccine front. Unfortunately, Johnson & Johnson, with just that one hit that you have to take, that one's actually not doing as well. It's not as good as the Moderna one. Then you have American Airlines. American Airlines plans to do a $1.1 billion stock offering. The plan comes after, the stock surged 9.3% on Thursday after fourth quarter results and 17.3% over the past 3 days. So that's a huge jump in the stock price, and they're now issuing these new shares, trying to kind of get some additional capital that they need. Then General Motors announced a big announcement too. They will plan to move all of their vehicles to electric vehicles and not gas or diesel powered by 2035. No more fossil fuels by 2035. That's huge because right now, 98% of the company's vehicles are gas or diesel powered. McDonald's came out and they missed on earnings and revenue. A bit of a rough fourth quarter. McDonald's said that U.S. same-store sales were up 5.5% from a year ago, which was higher than last quarter, which was up 4.6%. But the problem here was the international markets. The European Union has a lot of very strict rules in place on dining, and their international sales were down 7.4% from a year earlier, which is not as bad as the 10% decline before, but still it's not on an uptrend there. Adjusted earnings were $1.70 a share when the expectations were for $1.77 a share, so they missed the earnings right there. Revenue of $5.3 billion was also below expectations. And then, when we were talking about the Verizon situation, we had T-Mobile come out and they actually had 824,000 new phone connections. And then, Verizon was showing that they're having trouble bringing on new customers, but some of their competitors are doing all right. So we'll have to see why it's such a problem for Verizon versus their competitors. Then in India, there are these big protests that have been going on for several months now, and it's the farmers protesting new laws that were set up on the agricultural sector. So the protests are mainly taking place in New Delhi right now, and it was supposed to be like an organized protest, a normal thing, and they had set roads that they can go on, and then it became more of a riot, and there was attacks going on. Police came in and started hitting people on the head with batons, and at one point, they were going with tractors and breaking through barricades so that they can go to other sections of the city for this protest. And they even had a bunch of guys on horseback wielding swords came charging in and broke through police lines. So in the end of this, 80 police personnel were injured during the riots, and we don't know how many of the protesters were actually hurt here. But this is a big challenge to the government, kind of the biggest challenge with protests since around 2014. Then the Swiss bank UBS Group announced great earnings, just one of the best in the financial sector actually. Their profit was more than double in the fourth quarter from a year ago to $1.7 billion. Net profit was up 54% because of their banking and wealth management units. They were really focusing on the top sector of the market, the richest clients that they had. The company also announced a major buyback program of $4.5 billion. We're seeing a lot of companies now, once again, doing these share buybacks that we saw popular in earlier times and they kind of died off a bit. Retail order flows. If you're looking at what is going on now in the U.S. stock market, right? And how much of the stock market is made of individual investors? Well, retail order flows have reached 20% of the U.S. stock market's total, according to UPS research. That is twice the number that they were in 2010. At one point, they got up to like 35%, but still, 20% is a significant amount. So it's more of your average Joes being able to get into the market and invest. And part of the whole thing with the GameStop situation, GameStop trying to ended up destroying the marketplace and all the craziness that happened around that. I encourage you to watch my video where I give a whole separate explanation on the timeline of the events there. But a lot of people are coming into the market now, and hopefully things go all right and they're not scared off. They don't think that the system's rigged. And we see these companies come out and be more fair to all different parties that are engaged in trading stocks or investing in stocks. This is Andrew for Spark Finance. Tune in next week for your business news.